What I want to try to do today is get a bit of a debate going, if we can, in the audience, using the people on our panel to help with that. On our panel, we've got a range of people who have real experience of raising money in the marine energy sector and of deploying it and of supporting the sector. We have to my right Ronnie Quinn. Ronnie Quinn is the General Manager for Crown Estate in Scotland. Crown Estate licensed a seabed in the UK for use. Their principal objective, I believe, is to preserve and enhance the value of their seabed rights. They've also invested in projects. They invested in the Maygen project, for example. So Ronnie will talk to us a little bit about the experience and the parameters of the Crown Estate and how they view the sector and the industry at this point in time. So next to Ronnie, we've got Adam Norris. Adam's an investor with experience principally in the wave sector, and he'll share with you his thoughts and his experiences about that sector and about financing that sector. Next to Adam, we've got Dr. Martin Edlund, who is the CEO of Monesto. He's been with the company a long time. They have just raised money themselves. They're a title business. And he can share with you his experiences in raising money and his views about that. And to my immediate right is Tim Cornelius. Tim's CEO of the Atlantis business, has also raised money on the markets on a few occasions, been in the sector a long time, and Tim will share his experiences of raising money to effect tidal projects. What I would really like to achieve today, if possible, is to try and move the debate on a little bit. I've been at a number of these events over the last 2 years. I believe the funding challenges facing the sector, and there are still challenges clearly, are fundamentally different now than they were two years ago. I think we all need to recognize that. I think the simple fact that we have representatives from two businesses here, two tidal businesses, who have raised money on the private markets is really quite remarkable. You know, I think we should think about that and think about whether we thought that was possible 2 or 3 years ago, whether that was going to be the situation, and what that really means for us all. I think it's great that we've got a representative whose main experience is in the wave sector. My personal belief is that these sectors both need money, but they need different types of money. And my strong belief is that the sector needs the right money into the right projects at the right time. So what I'm going to do is ask my panel to make a few opening remarks each, and then hopefully we'll get some questions from you guys, and we'll get something going. So I'd ask for your help with that. I'd ask you to engage and throw out some challenging questions to us, and we'll see if we can get some lively action going. So first, I'd like to introduce Tim Cornelius from Atlantis. Tim.
Thank you, Andrew. Do we have to get up and walk around?
No, that's entirely up to you.
I like this sort of Parkinson mode. So ladies and gentlemen, welcome. First and foremost, thank you for turning up to the graveyard shift. We were very worried that no one would attend. There's a few of you here. The unfortunate thing about you turning up is that we can see you. There's not that many of you, and it means that you're going to have to now pay attention. Thank you, Callum. You'll be first, where we're going to be specifically picking people out of the audience and having a discussion with you directly, because you've probably heard enough from Andrew and I over the last probably 2 years, 3 years, and it's wonderful to be sharing the stage with some guys who are going to bring some fresh perspective. First and foremost, I think it's quite interesting that we're obviously sitting in full of an auditorium, which is quarter full, which obviously means that most people are funded and don't need too much of a helping hand, which is good. The second one, obviously, is potentially, I guess, the title of this particular project may have scared some people, chasing the dragon. I always thought that was smoking crack cocaine, and if that is what it is, then I'd like to think the gentlemen up here tonight are not doing that. But more importantly, and quite seriously, you do have some deep experience sitting up here today. Obviously, we'd be delighted to share what it is that we have achieved. I guess, as Andrew referred to, and we were debating this backstage. The sort of the difference between those that are seeking the angel and the VC money and where the market really is for that, versus those that are at the other end of the spectrum, as we are on the project finance side. I guess our journey over a 10-year period couldn't be at the greater of two extremes. And luckily Adam reminded me, because it's probably easy to forget where you came from. I remember the original business plan being $3 million in 5 years, and we were going to make a truckload of money. I think about $400 million US later, we're still going, and we're in the market trying to raise the best part of a £500 million. I think that the interesting thing about what we're doing and the perspective that we could potentially give today comes from the fact that, certainly in my humble opinion, when you look back at the way that the market has been funded, it was fundamentally upside down. So people were investing high-risk money in the early days on the device front, probably before the Rolleses and the Siemens and everyone entered the game. And the general investing thesis, I certainly thought in my overly expensive and reasonably useless MBA, was the sort of the high risk, high return. The big issue back then was that there was no tangible return because there wasn't actually a big, large market with which people were able to then bid into. I think the exciting thing about where we are today is that advent of the Magen project of TPSL, the aggregation of all of those tidal power projects that have now created the visibility over £500 million of CapEx projects, which potentially now come online 16, 17, 18, actually creates the prize. And I'm not necessarily an advocate of trickle-down economics, but I do think that it makes it a lot easier at the end when people actually see there is a big substantial market there. So hopefully any contribution that I can make today adds some perspective on what it's like raising £500 million, but certainly remember what it like when I was raising the first 500,000 as we were discussing backstage.
Good. Tim, thanks very much for that. Martin, I'd like you to, if you would, also make a few opening remarks based around your own experiences with Minesto and how you think that informs the sector.
Yeah, I can do that. I've been with Minesto since it was spun out of Chalmers University in Gothenburg 10 years ago. So, the perspective of funding differs in the different development phases of the company. So we may get into that a little bit as we chat along with this. First, I just want to say that I'm really glad to be back in Scotland. I don't spend enough time here, I think. It's great to be here. I had a great experience from the train from Aberdeen here this morning with my little tie. I got high fives from a lot of people on the train, and I realized that I'm carrying a tie that is a Glasgow Ranger tie, but that's sort of not deliberate. Anyway, we're a Swedish-Welsh company. That's how we see ourselves today. And I'll talk about the connections to Wales and the Welsh European Funding Office and what it means to us. But that also puts the dragon in an interesting perspective. So I was a little worried about the dragon there, both from the sort of the Welsh dragon perspective, but also because the word dragon in Swedish is a synonym for a kite. And since our technology is kite-based, I wondered that if I was exposed in any way here from that perspective. So, never mind. I'll come back to a little bit more on why we got funded. We secured up until we went for the IPO. We secured and spent around 20 million euros, and then we secured another 35 million from different sources, where the IPO and the Welsh European Funding Office were the key contributors to that.
Good.
So
okay.
That's where we are.
Excellent, Martin. Thanks for those opening remarks. Adam, the floor is yours. Feel free to sit, walk around as you wish, and give us your initial views, initial comments.
Going back to chasing dragons, I was a business angel for the previous, for a 5-year stint, invested in 21 companies. One of the problems I had was investing in lots of different sectors. Prior to that, I grew Britain's biggest pension company, so Scottish Widows, over the road. I was there, 10, 15 years ago, and they laughed at my business idea. So anyone who's got a wave machine or tidal thing and wants to do a startup, have belief in yourself. It is possible. It's difficult, probably, but people can do things. So I remember the head of Tesco's and the head of Scottish Widows were there. They laughed at me. I was 26, and I ended up growing the UK's biggest pensions company. So like these guys I listed, we floated for 600 million, and it's worth, I think, about 5.5, 6 billion today, which of my bit was a £3 billion business I built in 10 years from scratch. Started angel investing, owned 21 companies. If people want advice, there is a lot of money out there from an angel point of view. There's tons of money out there, but most of the people, we went around the industry, a lot of people don't present themselves very well. And I understand that a lot of people are engineers and background's engineering, but they've also, if they're trying to run a company and get funding, you're running a business. So if you don't present it as a business, and the CEO should spend some time understanding what a business angel would want before they invest. And we were saying they've both been funded originally by friends, family, which is business angels, and I think they are good, and you can get funding through business angels. I got fed up that I couldn't find people with enough vigour and determination, so I ended up starting a business, spent a year looking at all renewables, and decided after a year of looking at everything, so rather than starting with the technology, we looked at everything, and then decided after a year and a half to go into Wave, after a year we went into Wave, and then from then on, we spent the last year and a half reviewing all the technology out there in the marketplace, and trying to make investments, and struggled because most companies aren't the right sort of companies to invest. And we had decided, we didn't even look at these guys because we decided Wave, and I think you've got to stick to one thing. So we've had a lot of proposals come to us from Tidal, but we haven't even looked to see what they do. They're doing clearly a good job, but we're only Wave, and I believe in sticking to one thing. So looked at investing and can't find anything that enticed me enough to invest, so we're now building our own company. And why some people ask me, why is there a figure quoted between 50 and 100 million? I put my own money into the business. The reason is because we're running in equities and the market goes up and down, and give or take, we've deployed an amount of money into the company which is available for us to develop. We may end up buying someone. If there's a fantastic technology, we could end up buying something, or an enabling technology like PTOs, or if it was maybe a boat deployment or something like that. But, so that's what we're doing.
Good, excellent. Thanks very much indeed. A lot of experience there, a lot of business experience. Very, very, very interesting. Last but by no means least, I'd like to introduce again Ronnie Quinn from the Crown Estate, General Manager in Scotland. Crown Estate have been involved in the marine industry from the get-go, and Ronnie has some views based on long experience in looking at projects, in diligencing projects, from a Crown Estate perspective, and I very much welcome, Ronnie, your initial opening remarks on your experience to date.
Thanks, Andrew, and again, congratulations to those of you who are still here and still sitting and still awake. So far as the Crown Estate is concerned, as Andrew says, we've got responsibility for developing the seabed for renewable energy around about the UK. Over the past few years, we've leased, I think, current figures in excess of about 40 sites around the UK for wave and tidal current devices. We look very hard at anyone who's wanting to take an area of seabed, because if we didn't, frankly, the UK coastline would already be divvied up several times over, and no one would be able to get in or out of the UK except by plane. So we take these responsibilities and duties very seriously. We look at business plans, and going back to what Adam was saying, that's the crux of the thing. We are keen to understand what developers in particular are looking to do. And that ranges from a letter that's crumpled up and written in green ink saying, give me 300,000 acres of seabed and I'll save the world, to a carefully thought through 100-page business plan complete with graphs and levelized cost of energy projections. And one of those has got a much better chance of getting through. As well as that diligence on the business plan for leasing purposes, as many of you will be aware, we participated in the funding of Tim's project for Maygen. And again, many people consider that public money in some ways should be soft money. and I'm sure Andrew will agree, this is not soft money. We will all be subject to audit. We'll always be subject to making sure that public money is being spent appropriately. So we'll always be checking these things, checking the business plans with a great deal of rigour. It's not soft money. And from the Crown Estate's perspective, we always have an eye on the levelised cost of energy. What are the aspirations of this particular project? Is it going to be moving the industry further forward? And again, there seems to be, in some of the letters that we receive, an understanding or an acceptance or a belief that somehow or other these projects and these technologies have a right to exist simply because they may work. At the end of the day, we're in a commercial world, and these projects will have to have a line of sight to a commercial, sustainable lifetime. And that's something, cutting to the chase, that we look at very seriously and consider before we make any decisions.
Okay, Ronnie, thanks very much. One of the other aspects I'd like to try and cover, and I will wander around if I may, whilst I can, because I'm getting old. One of the other things I'd like to bring out is the European angle on funding and your views and experiences of that so far. But as I indicated at the outset, this works as a session for me, and hopefully for you better, if you interact with us. There's a lot of experience up here. There's even some money up here. So I'd like to throw the floor open, if I can, to see if anybody wants to ask a question. There are some microphones around. Does anybody want to ask anything? Hands up. No, so we can all go home and, yes, thank you, sir. Would you like to go over to the microphone and tell us who you are and then ask your question?
Max Karkas, Kailulum. I thought I'd help you out, Andrew.
Thank you, Max. It's very kind of you.
No
I appreciate it.
I guess kind of building on your theme, we've just been in a session of the Ocean Energy Forum, which is looking at what funding mechanisms Europe could put in place to help first-of-a-kind projects. I guess from your experience as developers, what should the public sector do for you if you think it should do something for you? Or do you think actually you don't need the public sector?
I don't know. Tim, would you like to kick off with that?
Not particularly, no.
Well, hard lines. I'm the chairman and you have to do what I say. That's one of those. Okay, Martin.
I mean, the public sector is already doing something great for Minesto. The European Union funding via WIFO is really the enabler to attract capital from the stock market for us. So that's back to your MBA takeaway there on risk-reward. I mean, we could actually go out to the stock market and say, we'll double your money because we have funding with us in it. And that, together with a very strong business case, sort of reflecting on your perspective of it, this is really about creating a business case that is really solid. So with those two aspects, that was sort of the key drivers to secure funding.
So in your case, what the public sector involvement did was help you attract other funding, effectively?
Key enabler.
Yeah, yeah.
Absolutely.
Yeah.
Because it's high-risk investments.
Yeah. Adam, do you have a view you'd like to share?
If you take, which I think the government should change their rules on not EIS, on, what was the, it's not EIS, no, EIS.
Yeah.
No, EIS is cool, mate. We've done a lot.
Yeah.
Oh, what's it called? R&D tax credits.
Right.
Yeah.
R&D tax credits, because I'm funding it.
Yeah.
I get, 25-30% back on everything I ever do, because it's novel.
Yeah.
But I've just turned down a chunk of European funding, because if you take any European funding in the UK, you have to then, you become deemed to be a large corporate, so therefore you lose your R&D tax credits.
Right.
So if you cannot guarantee a minimum of 30 million of funding, and you can afford to fund it, you don't take any European money.
Right.
Which you can say is good for everyone else, but it's shit for us.
Yeah. So very specific example there of something that could be done, and there's Ocean Energy Forum folk here putting a roadmap together, and maybe we could take that back to these guys. Tim, anything you'd like to add?
Yeah, so I mean, I guess from our perspective, and from a TPSL perspective, there are two critical elements to I pick up some of Max's question, but more so your focus on European funding. So to understand how the current mechanisms work for us, it does two main things. First one is it provides reasonably long tenure, to be decided, but reasonably well-priced debt. The interesting thing about that is that EIB as an organisation have historically funded a ton of different projects alongside long-term patient capital. And therefore, a lot of very, very busy long-only PE funds and pension funds typically don't want to do the work for, let's say, sub 200 million, and so are very happy investing in it as a syndicate. And so EIB wrapper, so they've gone through and they're very, very thorough in their diligence. So it takes a long, long time. But when they've actually done the work or through the process of doing the work, it provides a very strong validation and wrapper we're finding for the rest of the funding syndicate to come in, to the extent where they say, as part of the entry into the negotiations we're having now, EIB effectively, well, we want the right to be able to leverage off that due diligence that's been done, and we can take a bunch of that because we'll take solace from the fact that they've been through the process. So validation on the bigger end in terms of project finance and setting the tenure. So obviously trying to get away from 10-year notes and try to get to 20-year notes or the length of project, or try to match it as best you can to the length. And then of course, hopefully leading sensibly on pricing.
Yeah, good. Ronnie, before I bring you in, I'd like to throw a couple of comments in here. Being, as I am effectively a public sector funder, how do I see our role? Well, I think we see our role as, in this case, as being an industry building play. Now, clearly we can't do that on our own. What we look to do is leverage in the maximum amount of private sector money. And for us, for my fund, we can include other public sector money that we leverage in. So the commercial money that Crown Estate put in, which was a debt-like product, it counts towards our leverage numbers. So we enable all of that. But crucially, as well as looking for those commercial returns, what we look for, because we're Scotland, one of Scotland's economic intervention agencies, is those wins for Scotland PLC, which is why when we're funding, we look at things like jobs. Yes, we do. We look at things like where you're located, and we want you to do as much as you can up here. But crucially, we want you to use the Scottish supply chain, and we'll work with you to help you develop that supply chain. So I think our role as public sector is to do the piece that the private sector and the business itself cannot do, that gap, make that happen, make some money for Scotland PLC whilst we're doing that, help to build the supply chain to centre as much of the industry in Scotland as we can, in our case, and others will do that for their own geographies, which can create some tensions, of course. But then get our money back out and then go and do something else with it. That's what I see that we can and should do here. Ronnie, I don't know if you'd like to add anything to...
Largely to echo what you were saying, the industries and the sectors certainly at this stage of development and deployment do require some public sector funding, but that shouldn't be seen as a long-term position. And we should be, or at least have a line of sight to a world whereby the public sector can stand back. We're not there yet, and we accept that, but we need to have a position or a line of sight, as I say, to a world where this becomes a normal investment, that normal business angels, banks, investment houses are happy to invest in.
Yeah.
So that leveraging of finance is very, very important.
Yeah, good, okay. Max, I hope that answered your question, for which I'm very grateful. Yes, at the very back.
Hi, my name is Chuck Lauer with Atlas Ocean Systems in the United States. We're a wave energy collection tech company. We're a finalist in the U.S. Department of Energy Wave Energy Challenge, which shows relatively how immature the U.S. is. It's still at the hobby shop contest level in the U.S. We're competing for $1 million prize, which is cool, but that's not a business. So we're looking to relocate our business to Scotland, where there's actually real business opportunities here. And so my question for the panel is, aside from not speaking the language properly, what is the best thing we can do in terms of looking at a strategy for developing a Scottish or UK strategic partnership, alliance, and really base the business here where there's real business and real understanding of the potential?
Thanks for the question, and thanks for the desire and the compliments for what's happening here in Scotland. In terms of what you can do, I think speaking to the agencies in Scotland, Callum Davidson, my colleague from Highs down here at the front, he'd be happy to speak to you, I'd be happy to speak to you. I think having an early conversation is good. We are very familiar, both agencies, with projects coming to us and having a narrative with them and helping them shape their projects so it fits. I think a willingness to really locate here and not to be playing Scotland off as an alternative for other locations, which happens, and we understand it happens, but it's being honest and genuine about that, and a willingness to be a real partner and use the Scottish supply chain and help us to help you develop it. All of those things would be key and crucial for me. Having data about your device, being willing for it to be diligenced, and share all of that with us. And if you happen to come with some cash as well that we can match, invest against, or if it happens to be grant, there are other interventions, both that Highlands and Islands Enterprise and the Scottish Enterprise have. All of that would help. I'm going to ask Callum in a minute for anything else he wants to add on that, but I don't know if anybody on the panel has any thoughts about that. Ronnie, yeah?
Yeah, if I could just say that we're very fortunate in Scotland. It's a relatively small country, but with big ambitions. And over the next few days, you'll see almost everyone you would need to know and need to speak to about projects. And my advice would be to take the time out. Most people aren't that precious about giving advice and are very, very keen to help. So take the time, set up the meetings, set up the appointments, and speak to people. People are genuinely. We're not competing here. We're trying to make this work, and I think you'll find many of the agencies, or all the agencies in Scotland and within the UK, more than keen to give what advice and comfort they can going forward.
Yeah, no, I agree with that. Callum, would you like to step up to the microphone and just...
We can have a conversation later. May I ask a quick question?
Yeah, please.
Okay.
This is Callum Davidson from Highlands and Islands.
Having shared the skill, the scar, shall we say, of raising some projects for Major in the early stages of the number of people on the stage, I guess my question is, and there's two questions here, which is easier, raising tens of millions or raising hundreds of millions? And I guess with a supplementary question is, how many projects do you need that are tens of millions before you can actually raise that $500 million?
I guess that's directed at you, Tim, principally. Yeah.
Thank you, Callum. By the way, Chuck, I think you just paid for your flight, right? That's the best advice you're ever going to get from senior guys in the industry. Look, the answer is perversely probably what you're expecting me to say, which is a much more organised and mature funding syndicate at big numbers would appear, and you know we're not there yet, but it would appear to be. I mean, it's not less challenging, but it's a lot less stressful. It's organised. It's a process. It's run by investment banks. It goes through a process. Much more different to the early days. And I mean, I'm sure both of my colleagues here would agree. You know, you do always say that the first $1.5 million, the friends, fools, and families round is always going to be the hardest, and I suspect it probably is. And it's the one that comes actually with the most guilt. More sophisticated investors, that invests in you after that, well, they're coming in with their eyes wide open. It's not quite the same when you're obviously taking it off the friends, fools, and families round. So Callum, perversely, yes. I mean, we have, we've gone through the different stages. We did a lot of money. We did a hell of a lot more money when we were private in terms of total raise. And taking the company public is a stressful and process in itself, but a good process. But subsequent to that, we live in a very didactic world now. So you manage Parent Co, and Parent Co runs its business like it has to, managing OPEX. But on the other side, it's a very, very different investor world for the long-term, boring, patient, CPI index-linked, 25 years, stable political environment, bigger checks. And I think the biggest issue that we've got there is actually finding investors that are comfortable within the sort of 25 to 100 million range. It sounds perverse, but you'll struggle to get bigger, certainly the pension funds, because they may run 5 billion worth of money, which is fine, but they honestly might have 5 or 6 guys that are actually running that desk, guys and girls. So they have a road and a port and a tidal power project, which they're looking at, and it needs to be significant enough to be able to put enough money to work. So, yeah, I do think that it was tougher in the early days, and it gets, I mean, there's no such thing as easy, let's not fool ourselves, right? But I mean, it gets progressively easier. I think the interesting question that you raised, which is probably one for Adam and one for the guys going forward as well, is what is the profile, the right profile of investor for this market? Are you going for unicorns, or are you going for IRR? It's a very, very different market, right? Because in the early days, people are trying to find the shooter, the one that hits it, and all of a sudden it's worth a boatload of money, versus those that, ultimately just chasing 7, 8, 9, 10%, as I said, index linked for 25 years. And we used the term almost euphemistically before when we were out the back. But this is an industry still, in my opinion, which is a little bit different, I think, to where Adam invests at the moment. But, we're certainly, I think, of the mind where we are desperate to get boring. It's just got to be boring. It's just got to be really eked out, 25-year, very predictable. I mean, boring is so good. I mean, it doesn't need guys like me around then. So, yeah, I've run it on.
We're going to paint our kite in grey.
Yeah, perfect.
Adam, I think you've been through the process in another business, building up from scratch. So maybe you have some useful advice and comments on that.
So the funding bit at the beginning, I had to give away 75% of my business. I think one of the things I've seen is most people who've got wave business are trying to raise early funding, so they were happy to give away 10%, 20%. I gave away 75%.
Yeah.
What it did was it got some really good guys involved in my company to back me. I had no choice, so I had to take it. It was all that or do nothing. And most probably people would have done nothing because they just said, I want to own it all, or I want to own 75% themselves. I think the early bit, getting angels, is probably easier than later, because I think where you are now, you are dealing with sophisticated investors that want to crawl through everything. Yeah. I think the early stage, maybe the government stuff, I think it's easier to get government funding. I think it's quite easy. I think the city's difficult because they're more sophisticated and they're harder people to deal with. And the angels, oddly, because there's a lot of people go into it, there's a lot of people who make some money. We had a cheque ready to go. I'd cleared funds in a bank to do a wave device about 8 years ago. And we were really proud. We'd found Polaris and Aquamarine. We'd done a bit of research and we thought these guys are really good. And I'd cleared, I don't know, £250,000. And then had one director being a pain, so we didn't do it, and then all fell through. But I think that angels don't do enough due diligence. I don't think they understand. We were talking earlier, it's much bigger, more complicated, this sector, than I ever thought. But I think you can, and it's, you guys have both raised, and every single device out there has raised angel funding, give or take, or it's been university-led, but most of them have managed to do it. So I think you can convince people. I think it's harder at the tail end. I think where they are is more difficult at the city end.
And Martin,
I mean, there's always going to be angel money around, I think. If you work hard and you present your business plans, the first million is not that easy, I think. But when you turn into second, third round of funding in this, I think it's critical what you've used your money for. If you spend your first rounds of financing just to play around with your technology, then you're exposed to risk to really secure it as a business in the next step. So I think for us, it was very important that early on, go a little broader. I mean, we spent enormous, from that small little company's perspective, enormous amounts of consultancy money in creating a levelized cost of energy model, investing in that, and saying, we took that away from the technology development. But that was a very wise decision. So we really can broaden the company and go towards a business case early on. So that has been an enabler also for us in raising the little larger money. But I mean, we're not yet there in the project, the infrastructure funding side of it. That's where we are right now.
Yeah, and in terms of a profile of investors, my comment on that, for what it's worth, would be in the sort of earlier days when the big utilities were involved in various parts of the sector. I think what has turned out to be the case, and I don't think, to be fair, this was obvious at any point until it happened. I think they turned out to be the wrong kind of investor, really. And I think VCs, I've always thought the wrong kind of investor. They're time-driven And this is an industry that requires some patience, and that's not a typical VC quality, with due respect to any VC guys that are around. So I think you need to look now for those people who have something to gain from the industry becoming established, becoming business as usual. Who are they? Well, some of the big supply chain guys. And I think we can look at the experience of offshore wind. It's often looked at as an exemplar for our industry, but I think it's sometimes looked at for the wrong reasons. If you look at how some of the offshore wind projects get started, they didn't get started by offshore wind developers. They get started by big supply chain businesses who thought, if wind farms get built out there, they'll have to use my stuff. So they started them and then sold them. I think you have to look and think a little bit outside the box in terms of a profile for investors. That would be my thought on that. Okay, anything else question-wise? Yes, there's one at the back and one at the front. If I go to the back first and then down at the front, if that's okay. Please, if you don't mind.
Hi, it's Cassie Verber. I'm a journalist with Quartz. I spoke to Tim recently for a story about Maygen. But this question's for Adam. I was wondering, you said you looked at renewables for a whole year, and you identified wave as the one thing you really wanted to invest in, and then found it really difficult to find companies to invest in. So the question is really, what was it about wave that you wanted to invest in that you then couldn't find in any companies that are out there?
There's a lot. So one, we looked at maturity of other businesses. So we looked and discarded. So we started with everything. We wanted a natural resource within the UK, so we didn't want to build a machine or something we could never operate within the British Isles. And for example, geothermal is great if you're in Iceland. There's a little bit in Bath. They heat their water for their baths, but that's about it. So one was, we wanted to look, we decided, it took some time because we were really close to doing concentrated solar with the big towers and looking at that. I liked it, it was good fun, we liked it, but realised that to do all our tests, to run test rigs, and I believe in doing lots and lots and lots of testing, we'd have to base a business in Morocco or Egypt or somewhere out there. So we decided, I didn't want to travel that much, so we decided to draw a line under saying anything, the resource had to be available within the UK for testing purposes, but had to be global, so we also got rid of all the renewables we thought were small scale. We looked at the maturity of industries, so the money I had to deploy, I didn't think I could take on Siemens, where they're at the moment in the wind industry. I didn't think I'd take on the big photovoltaic teams effectively you have £1 billion in each, at least a minimum start. And we just, also I'm a mechanical engineer at heart, so didn't do any renewable, which was biogas and gases, and I like algae growth, I think it's really cool, but it's not what I would want to spend my time. Not a problem I want to spend my life solving. I couldn't add to it, I don't think I would enjoy, I don't understand the compound, chemical bits. So it just came down to effectively getting rid of stuff, and there wasn't a lot left except for, and it was then wave and tidal. And the truthful bit at the end, there wasn't a lot, so my commitment to my team was, we're going to stick for the rest of my life in this, so it's not 5, 10, this is the rest of my life. To the point where my son's coming into to our sector and learning it. So I can't sit here and say I have a genuine reason that I think you can say, well, maybe now, probably with hindsight, the wave sector might be a bit bigger. I think it's easier doing tidal, and it's a more mature business today. For an easiness, I probably would have gone that way now. But we are where we are, and I think that it's possible to build a wave machine at a commercially viable price. It might take me 5, 10 years, realistically. Cost 100 million, that sort of level. But happy with the wave. I'm in it for the rest of my life.
So just to recap there, for all of you wave device developers, this is a lifetime commitment from a guy who's got between 50 and 100 million. So if there's a queue forming over here, I would fully understand that. Next question from down here, yeah.
Hi there, Richard Linley from Ocean Links, Business Development Director. A number of things I really want to say. First of all, EIS and R&D tax credits. I've written to Amber Road and I've written to the Scottish Government about this. I think it's critical to move away from the fact that any technology that's got a feed-in tariff can't apply for tax credits and EIS. It's ridiculous. You need early stage technologies to be able to draw on early stage investors that put £1 million in it and can instantly get £300,000 back as a tax credit. That would have solved a number of problems for early stage technology developers here. But anyway, that's a problem that remains to be solved. And I keep banging on about it, but I seem, other than Adam, to be a voice in the wilderness. Ocean Links have actually got a way down the technology of development for a wave device. We got an early stage prototype, put 8,000 hours onto the grid in Australia. We then scaled up through the ARENA funding, along with Carnegie and OPG, another company I can never remember, and got funding. And then we lost our device. Well, not us personally, it was lost by a charter company called Polaris, biggest in Australia, spent a lot of money, and then lost our device. So we then, that forced us into an insolvency where we had to start again. So I've spent the last 12 months talking to private equity companies in London and venture capitalists in the same year that we've lost 3 wave device developers. So we lost Polaris, Aquamarine, and AWS, more or less. So here I am trying to raise money against that background, and it's becoming increasingly difficult for me to actually convince early stage investors that wave is a viable technology. But although we've had 8,000 hours on the grid, and we've had funding from the Australian government. So what I'm saying is, I agree with Adam, is that the technology, the size of the prize is worth going for. But it's just a case of, right now, it's very difficult to knock on the door and get investors to take a technology seriously, or a sector seriously, that's suffered so much difficulty. So that's another hurdle that we've got to try and address as an industry. And any success is, as far as I'm concerned, at whatever stage in the wave sector, is useful, because it's something I can point to and say, we as an industry want to get this right, but it's about working together to convince that now jaded, from my perspective, investor community that actually wave stands a chance. But having said all that, I've recently found a bunch of investors who are keen in wave. But that's simply by knocking on the door, being persistent, and actually it was a friend of mine who put me onto these guys and said, have you tried these? Because I know they do feed-in tariff investments, and given that Amber Road's moved away from feed-in tariff, they might be considering doing other stuff in the feed-in tariff area. So I think it's about resilience, it's about persistence, and it's about having a lifelong commitment. So that's sort of a number of observations rolled into one, really.
Yeah. Richard, thanks for that. For what it's worth, I would add a few observations of my own into that narrative. First of all, I completely recognise how tough it is to raise commercial money, private money, for a wave project, particularly in the UK right now. And I can confirm that inside our business, Scottish Investment Bank, that our fund, the fund I look after, is still absolutely open to wave device developers. They have to come with all the things they've always had to come with, which is some private money, a business plan that works and benefits for Scotland plc. But getting an approval for a wave project is all the tougher internally now because of what's happened in the industry. That's inevitable, I think. So I would acknowledge that. What I would also say, though, is that it's not my job to speak on behalf of Scottish Government here, but I'll make that clear. But what I would say is that the response from Scotland to the failures that have afflicted the wave sector specifically, and they were really tough and really tough for the people involved, I'm sure. And the response was to set up Wave Energy Scotland as a funding mechanism. And I think in the Ocean Energy Forum, that type of mechanism, for those who don't know, it's a public procurement model, which is effectively procuring the bits and parts of a wave energy device, so that a wave energy device that has the potential for success emerges at the end of it. And Callum and his colleagues will tell you more about that. It's their project, and we obviously help them with that where needed. So the response was good, but the bit that's missing from that story is all the work, which was about 18 months of really intensive work from high from ourselves, from Scottish Government, in really looking at what was happening in the wave industry, in the wave sector, and really looking at whether we, as public sector bodies, could and should carry on supporting those specific businesses and what the real cost was going to be. And you know, when that was done with the help of independent consultants, the sorts of money that were being talked about at that time to get devices commercial, well, not specific devices, but devices generally commercial, it was the same sort of cost as a hospital. Now, frankly, the public sector should not be funding an industry that requires that sort of money on its own. It just can't do it. There's no justification for it. So there was an enormous amount of work in the build-up to that. And what I would do is commend Wave Energy Scotland as a solution in Scotland to that sector, whilst making it clear that our fund is still open for business in that respect. Guys, any other comments on Richard's narrative there? Yeah.
A couple of things. I think you'll probably find that half the companies or three-quarters of the companies developing probably turbines or wave devices are getting EIS. So I'm pretty sure you can. It's just that they're not going to go on and try and sell the stuff to the grid, so they're going to sell a device. Yes. So therefore, for maybe for the next 10 years, you just take that money while you're developing something. But yes, in that case, if you're trying to sell it to the grid. Venture capitalists, I went, long story, I got a favour from someone who's introduced me to all the top venture capitalists in London doing renewables, and they all hate wave. Everyone just said, don't go near it. Mm. And that's because they just look at the failures that have come, yeah, and that's their only benchmark, and just say, well, it's a useless industry. Yeah. So I would just avoid it. You know, and your industry is better than, you know, they should be separated, and yours has got a better track record, and is moving forwards. The wave industry isn't. It's, yeah. Doesn't mean it can't be done. It's just not in the same position. You can't compare the two.
They're not the same. They're required.
But I wouldn't bother speaking to VCs anymore. And also, I think their time horizons are wrong for the investing. Yeah. So I put down here, going back to private offices, which are individuals who are wealthier individuals investing because they have a longer time horizon. And a lot of the wealthy people are worried about the environments. That I know quite a few people who are investing in renewable type things and larger lump sums, and longer to have the time horizons. They're comfortable with the time horizons. I think you're saying the bit's probably as important as anything is having a good business plan, because most of the ones that we saw, and this isn't just in this sector, generally people have built a business plan in their own head for many years. They understand everything like the Crown Estate, they understand everything, and they come along with a 3-page or an 8-page plan and just go, can we have some funding, please? And that's not, the people who can afford to fund are successful business people, and they know what it takes, and they want more detail, and they want to be able to probe. And so therefore I often think most of the wave companies don't deserve the funding, and these guys are clearly successful business people, and they deserve it and have got what they deserve. Yeah. But honestly, most wave device proprietaries don't deserve the funding because it's not a proper business plan. They're just, you're saying about your industry in America or whatever being, a lot of the business plans are just sort of hobbies. They're not thought out properly.
So whilst I wait for somebody else to put their hand up for a question, one observation from me on the financial readiness aspect. One of the things that I'm feeding into the Ocean Energy Forum roadmap, I and others, based on our experience in Scottish Enterprise, Highlands and Islands Enterprise, is the financial readiness type service that Scottish Enterprise, Highlands Islands Enterprise offer to companies generally, not just talking about energy companies or wave companies or tidal companies. And it does seem to me that this is a free service and it's offered because what we as agencies want to do is be seen to be attracting and helping to attract investment into this country, into Scotland. And if our businesses that have great ideas and have skills, but perhaps not in that part of their business, if they need some help, then that's what we're there for. So, you know, if there are companies there who do suffer from this, who recognise from this description, recognise themselves, or just have the self-appreciation to realise that's where they are, don't forget that the agencies can help you with developing your business plans. So, yes, sorry, sir.
Yes, Gordon Edge from Renewable UK. I couldn't agree more with Tim. Our aspirations should be boring. We need to be a dull infrastructure sector, and that should be our highest aspiration. But that's really difficult when you're in a sector which is so heavily dependent on public policy, especially given the background of the last 12 months or so, where public policy has been in turmoil. Does anybody have any comment from the funding perspective of what that's been doing, that policy background for renewables as a whole, been doing to the wave and tidal sector and its ability to raise finance at whatever scale?
I'm happy to kick off from a sort of public sector perspective, and bearing in mind that we who work for the public sector are not allowed to be political in any way, shape or form. So the comments I'm about to make are not political. The unexpected and unplanned changes to feed-in tariffs last year completely halted appetite for investment in mainstream renewables, onshore wind projects. Never mind projects in the oceans. That's what happened, and the impacts of that, in my personal opinion, will be felt for many, many years, and not just in the energy sector. Effectively, what's happened is the political risk score of investing in the UK has gone up, and that will impact on investment decisions. But there are positives here, and I think the positives maybe sit at the European level, and they sit around this specific sector. This specific sector has not really been singled out or mentioned in the cuts. In the changes, cuts might not be a politically correct word, in the changes to tariffs, and I think that is good, and I think that is positive, and it's a good message to send out to potential investors. But also, it begins to make sense of the idea of having platforms that can invest in a number of projects, perhaps some of them in different jurisdictions, so that the perceived political risk is spread and shared. And I do think that my perspective on investing in the UK may be a little bit jaded because of the projects I was involved with, which were immediately switched off when all that happened. It may not be as bad as I'm painting it. I'd welcome some input from others on the panel on that. Tim, do you have a few comments on the impact in terms of investment?
Yeah. Yeah. Look, I mean, I do, and difficult, right? Because I mean, this is why these rooms are very, very difficult to manage. I don't envy your position, because I mean, on one end, you sort of sit here and everyone has these discussions. It's like on suicide watch. It does my head in. You sit here doing another one of these, and everyone's on suicide watch again. Can't believe it. Look, in our sector, and I can't speak about Wave. We know that. I know nothing about Wave. I've always said it, always maintained it, and it's still true. Know nothing. All I can speak for is our sector. In our sector, there's never been a better time to be alive. If you're complaining, go and do something else. You've got a feed-in tariff that's been untouched. You've got the most supportive Scottish government in history. You've had successive FMs who have thrown their support behind it. You've got an unbelievably supportive energy minister. You've got a Crown estate which is organised. You've got infrastructure investment which has freed up grid. You've got everything that you now need aligned to go and make it happen. People would kill to be in the position that we are in at 305 or 5 rocks. And yet some people still say, is the public sector, is public policy doing the right thing? I mean, look, I would be devastated if I had my feed-in tariff cut and kill the industry overnight. But with due respect to onshore wind, it had 17 years of pretty good, solid policy. If I get a run for 17 years, well, by the way, if I'm still here, shoot me. But if there is 17 years, of a nice, solid tidal tariff, there'll be a hell of a lot of tidal built. So, I don't know. I get a bit upset when we're sitting here, because I don't think that we can complain. These are the next 3 of the best years in the history of the tidal power industry. And my contemporaries and the boys that forged the ground, the Peter Frenkels of the world, the guys that were looking at this, they didn't have any of this clarity 10 years ago. So, yeah, my personal opinion is, you've got what you want. If you don't like it, shut up and go and do something else.
Okay.
I think you can add an international perspective to it also. Thanks, Tim. That's good. Yeah. There was a little gathering in Paris in December. The political agendas, maybe not specifically here, but if you look globally, there's a lot of momentum towards shifting in energy. And that also means that if we had we're a little ahead here. This is probably the leading area in the world in this sector. I mean, when you're talking to governments in Japan, Taiwan, Chile, all over where we've been with our technology. And the interest you get and the invitations you get there from there is a real sign of this being going in the right direction. So.
Yeah. Interesting. No. Okay. So that's a different perspective. So two down the front. You, sir, please.
Andrew Mill from EMEC. Two other things I'd like to just mention in my own past because it will give some context to this. I ran the European Marine Energy Centre when it was first set up, 2003. So we've seen quite a lot of activity in the wave and tidal sector up in Orkney. I ran the National Renewable Energy Centre down at Blythe, where we've done a lot of work on component testing and development of test facilities there. I've been involved with the WES. I'm on the Industrial Advisory Group. So I'm talking now with a lot of background in this sector and seeing what's come through. The thing I would say is, and Adam mentioned it, testing, obviously, it's very close to my heart. At NAREC, we tested 16 wave devices that came through in a tank at 10 scale. Well, less than half of those knew how to get the device off the truck that brought it, we're talking about 20 tons, into the test tank. We had to have a team of engineers that knew where to put on the lugs and how to do that. How can you expect an industry then to go and put 1,000 tons of steel into the water if they're not that far developed in their thinking? And I think very important part is this business plan. We talk about what the business plan is. We need a technology plan that includes proving the technology every step of the way. Do you think Boeing put a 777 into the air, without going through that process of knowing the process of both developing the technology, but then in parallel, the validation of that technology? So let's get a plan for how you develop technology for this industry, because it is different to many. We're going into a marine environment where there's not a lot of experience. The oil industry build platforms to get out of the energetic water, big enough to withstand it. So we're looking at a different type of environment. The environment-machine interface is different. And we've got a lot of very bright guys that think they've got the answer. But I'm with the panel on this. You need a business plan that takes you technology development and separates out the business development. And you need the right people to come in at the right time to take that company forward with the technology in order to attract the money. Until you've got a business plan that can show them not just the technology development, but a proper way of how you're going to take that technology to market, we're wasting our time. And I think, with all due respect to the guys that have been involved in the past, and I'm talking now about the wave sector, they had great ideas. But when you look at what they tried to do, build factories, build capability to build things, without first having a technology that was actually working, we really were putting money into, and for all the right reasons, but into the wrong part of that development.
Thanks very much, Andrew. A very informed opinion based on long experience. And just for the record, I believe that the type of technology development plan that's just been described is really at the heart of the WES model, the WES funding model. And certainly for us as funders has always been one of the two principal areas we diligence in any deal we do, so technology development and financial development. And I think it's important to acknowledge Andrew was saying that there are differences in the state of readiness of the wave and tidal sectors. So I think we're past time now, which is kind of encouraging for me because I thought it was going to be difficult. So I think there's a reception downstairs with drinks, etc. Time for one more question. I think there's an appetite here, and then we'll close the session down. Thank you.
Hi, I'm Rob from Siemens. Simple question. How many megawatts are we going to have in the water 2020, 2025, split wave and tidal?
Okay. Anybody like to take that?
I need some time to add it up. Not a lot.
Well, we've got.
I just think.
Somebody offered up not a lot.
They got any boys? I don't know about tide.
In Scotland?
Well, let's start with Scotland, yeah.
Yeah, I mean, in Scotland, so we'd like to think Phase 1A, Phase 1B, Phase 1C, and Sound of Isla.
Yeah.
100 megs.
So I think my answer to that question for what it's worth...
2020.
2020. Yeah. My answer to that question for what it's worth would be the principal driver of that will be the success of the first projects. So, because the success of the first projects will drive the money into the other projects, and that will drive megawatts into the water. That's what I believe. And that's what I believe is needed. I don't know if anybody else has anything else to add. Ronnie, do you have anything you want to?
I would endorse what you're saying there, Andrew. I mean, we're not quite putting all our eggs in one basket, but it's going to be key that we get some success in the near future, and I'd agree that will re-energise the investors out there, because that's where we're looking at. We're looking at attracting global capital into this. I think we've got the energy. I think we've got the vision in Scotland and in the UK to make this work. We just need to demonstrate it now. But we need to do this in a staged way. We can't just... We've been here before, 5, 6 years ago, where we were talking about, for example, the Pentland Firth Knockney Waters project. We had 1,600 megawatts there, that at that time everybody was expecting by now to have been largely developed. We're not there. We just have to be mindful of over-promising and under-delivering. To be honest, we've done that in the past. I think we've re-baselined. I think there's a more pragmatic and realistic expectation within the industry as to what can be achieved. I think we still have to have stretching targets. Otherwise, we're just not going to get anywhere. But we have to be pragmatic and not overpromise and underdeliver again.
Ronnie, thanks for that. Ladies and gentlemen, I'd like to draw the session to a close. First of all, by thanking you for coming in this late afternoon slot. Secondly, for your participation in asking some really interesting questions. And finally, I'd like to ask you to do one more thing, which is to thank my distinguished panel.